The number of housing starts fell a little in September despite mortgage rates coming down from multi-year highs. Housing starts are the change in the number of new residential buildings that began construction. They are nearing the lowest level since May 2020, when the economy was struggling to dig its way out of the pandemic. As of the end of September, the average on a 30-year fixed-rate mortgage was about 6.3%, according to Mortgage News Daily. That is down more than a full percentage point from a recent peak earlier this year, although it is still far higher than in the years prior to the pandemic. At the peak of the pandemic, the Federal Reserve cut its interest rate target to near zero, and mortgage rates plunged to ultra-low levels. The low rates prompted an extension of home buying and investment, generating a pop in home construction. But then, inflation increased and the Fed hiked interest rates in response, pushing mortgage rates to the highest level since the turn of the century. Now, the Fed has conducted its first rate cut since the start of the pandemic.
Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point.
The housing market and housing affordability have been major concerns for voters this election cycle. The Fed hiking interest rates in order to tamp down inflation has only made buying a home even more challenging for voters as mortgage rates rose.